Welcome back to our last video out of total 3 videos of FP&A interview preparations. We will cover situational based questions in this video, and they are blend of technical and personal skills. Similarly, like last video, you can increase the speed if you feel so. Listen at least 2 to 3 times before appearing in interview. Additionally, you can take screenshot of questions and video and go through these concepts just before interview. Without wasting much time, let's start. In this third video, we will be covering the below 10 questions, mostly of which are very situational based to test your technical and personal skills. Kindly pause the video and read out the questions. You can also take screenshot as well. Question No. 1. What are the key differences between FRS and GAAP accounting standards, and how would you reconcile them while doing analysis? When analyzing financial statements, it's crucial to understand that IFRS operates on a principles-based framework, promoting flexibility and interpretation, while GAAP adheres to a strict rules-based approach. For instance, revenue recognition under IFRS allows for more discretion, potentially leading to earlier revenue reporting compared to GAAP's stringent criteria. Similarly, inventory valuation methods differ, impacting reported profits. Leases and financial instruments also showcase distinct treatments, necessitating careful reconciliation to ensure accurate analysis and comparability in financial reporting across these standards. It is recommended to read about the differences between both these. FRS focuses on principles-based accounting, while GAAP is rules-based. Key differences include revenue recognition, inventory valuation, leases, financial instruments. Few more tips while answering during interview. Also, everything won't be clicked. At spot, whatever is clicked will help you ace the interview. Highlight the main differences between IFRS and GAAP. Explain the implications of each difference on financial reporting. Provide examples of how companies may report differently under IFRS and GAAP. Next question is, how would you build a comprehensive financial model to forecast revenue and expenses for a new product launch? Building a comprehensive financial model for a new product launch begins with identifying the key drivers of revenue and expenses. Understanding market size, growth rates, pricing strategies, and associated costs is crucial. I would then develop realistic assumptions to create a detailed income statement, balance sheet, and cash flow statement. Sensitivity analysis plays a vital role in this process, allowing us to test our assumptions against various scenarios. This approach not only enhances accuracy, but also equips us to navigate uncertainties effectively. Probably you can answer ER. To build a comprehensive financial model for a new product launch, I would identify key drivers of revenue and expenses. Develop assumptions for market size, growth rate, pricing, and costs. Create a detailed income statement, balance sheet, and cash flow statement. Use sensitivity analysis to test assumptions. Remember the below tips while answering. Outline the key steps in building a comprehensive financial model. Explain the importance of identifying key drivers and making realistic assumptions. Highlight the need for sensitivity analysis to test assumptions. And so, next question. If you were tasked with reducing costs by 10% without impacting revenue, where would you focus your efforts and why? For this question, remember, to reduce costs by 10% without impacting revenue, we must first pinpoint areas where expenses outweigh value. Identifying these high-cost, low-value sectors is crucial. Next, we analyze cost drivers. Understanding where our money flows allows us to uncover opportunities for reduction. For instance, focusing on variable costs like labor and materials can yield significant savings. Implementing process improvements and renegotiating contracts are practical measures. Each step we take not only trims expenses but also preserves our revenue stream, ensuring sustainability. You can easily like this. To reduce costs by 10% without impacting revenue, I would identify areas with high costs and low value added. Analyze cost drivers and identify opportunities for reduction. Focus on reducing variable costs such as labor and materials. Implement cost-saving measures such as process improvements and renegotiating contracts. Few tips while answering. Explain the importance of identifying areas for cost reduction. Highlight the need to analyze cost drivers and identify opportunities for reduction. Provide examples of cost-saving measures. Fourth question. If you were asked to develop a financial plan for a new business venture, what key factors would you consider and why? Let's understand first. When developing a financial plan for a new business venture, several key factors must be meticulously considered. First, understanding the market size and growth rate is crucial as it informs potential revenue streams. Pricing strategies and associated costs must be analyzed to ensure profitability. Realistic assumptions about revenue and expenses are essential for accuracy. A comprehensive income statement, balance sheet, and cash flow statement will provide a clear financial picture. Finally, evaluating funding requirements and identifying potential sources of funding is vital for sustaining growth and achieving long-term success. Now you can answer like this. To develop a financial plan for a new business venture, I would identify key factors such as market size, growth rate, pricing, and costs. Develop assumptions for revenue and expenses. Create a detailed income statement, balance sheet, and cash flow statement. Evaluate funding requirements and potential sources of funding. Kindly note the below tips while answering. Outline the key factors to consider in developing a financial plan. Explain the importance of making realistic assumptions. Highlight the need to evaluate funding requirements and potential sources of funding. Suppose the company is facing a cash flow crisis due to delayed customer payments. How would you manage the situation and ensure the company meets its financial obligations? Let's dive into these questions. Facing a cash flow crisis. The first step is to pinpoint why payments are delayed. Understanding the root cause is crucial. It could be anything from customer dissatisfaction to internal inefficiencies. Open communication with customers is essential. Reaching out, discussing their challenges, and finding solutions together can expedite payments. Meanwhile, I'd explore options like factoring or invoice discounting to boost cash inflows. On the other side, negotiating better terms with suppliers can help reduce outflows, ensuring we meet our financial obligations. For this question, possible answer can be to manage a cash flow crisis due to delayed customer payments, I would identify the root cause of the delay, communicate with customers to resolve the issue, develop a plan to accelerate cash inflows, such as factoring or invoice discounting. Reduce cash outflows, such as by negotiating with suppliers. Similarly, some tips while answering. Explain the importance of identifying the root cause of the delay. Highlight the need to communicate with customers and develop a plan to accelerate cash inflows. Provide examples of ways to reduce cash outflows. Next question. Suppose you've been tasked with developing a financial model to evaluate the impact of a new tax policy on the company's financial performance. How would you build the model and what assumptions would you make? Let's understand. Developing a financial model to evaluate the impact of a new tax policy requires a structured approach. First, I would identify key factors such as tax rates, deductions, and credits that directly influence financial performance. Next, I would establish realistic assumptions regarding how the policy might affect revenue and expenses, ensuring they reflect current market conditions. The model would include a comprehensive income statement, balance sheet, and cash flow statement. Finally, I would implement sensitivity analysis to rigorously test these assumptions, allowing for a nuanced understanding of potential outcomes and ensuring informed decision-making. Possible answer can be to develop a financial model to evaluate the impact of a new tax policy. I would identify key factors such as tax rates, deductions, and credits. Develop assumptions for how the new policy will impact revenue and expenses. Create a detailed income statement, balance sheet, and cash flow statement. Use sensitivity analysis to test assumptions. Let's move to next question. Suppose you've identified a trend of increasing costs in a specific department. How would you analyze the situation, identify the root cause, and recommend cost-saving measures? Let's evaluate. Identifying a trend of increasing costs in a department requires a systematic approach. First, I would delve into the data to pinpoint the root cause of the escalation. Understanding the cost drivers is crucial. Whether it's inefficient processes, outdated technology, or inflated contracts, each factor demands scrutiny. Once identified, I would recommend targeted measures such as streamlining operations or renegotiating supplier agreements. Continuous monitoring of these initiatives will ensure we evaluate their effectiveness, fostering a culture of cost efficiency and financial prudence. We can answer like this. To analyze a trend of increasing costs in a specific department, I would identify the root cause of the increase, analyze cost drivers, and identify opportunities for reduction. Develop a plan to reduce costs, such as by improving processes or renegotiating contracts. Monitor and evaluate the effectiveness of the plan. Keep in mind the below tips. Explain the importance of identifying the root cause of the increase. Highlight the need to analyze cost drivers and identify opportunities for reduction. Provide examples of ways to reduce costs. Next question, they evaluate the financial performance of a company in a declining industry and recommend strategies for improvement. Identifying a trend of increasing costs in a department requires a systematic approach. First, I would delve into the data to pinpoint the root cause of the escalation. Understanding the cost drivers is crucial. Whether it's inefficient processes, outdated technology, or inflated contracts, each factor demands scrutiny. Once identified, I would recommend targeted measures such as streamlining operations or renegotiating supplier agreements. Continuous monitoring of these initiatives will ensure we evaluate their effectiveness, fostering a culture of cost efficiency and financial prudence. We can answer this question like, to evaluate a company's financial performance in a declining industry, I would analyze financial statements and industry trends, identify areas for improvement such as cost reduction and revenue enhancement, recommend strategies such as diversification, consolidation, or innovation. Kindly note the below tips while answering. Use financial statements and industry reports to support analysis. Identify key performance indicators, KPIs, and benchmarks. Consider multiple scenarios and sensitivity analysis. Question 9. What are the financial implications of CSR initiatives? Let's understand first. Corporate social responsibility (CSR) initiatives can lead to significant cost savings through energy efficiency and waste reduction, while simultaneously driving revenue growth by attracting socially conscious consumers. Successful examples like Unilever's sustainable sourcing enhance reputation and mitigate risks. For long-term sustainability, integrating CSR into business strategy is essential for enduring success. So for answering this question, keep in mind you should explain cost savings, revenue growth, and risk reduction. Discuss the importance of CSR in long-term sustainability. Provide examples of successful CSR initiatives. Below are must-give points while answering. CSR initiatives can reduce costs and increase revenue. CSR enhances reputation and reduces risk. Companies must integrate CSR into their strategy. Finally, the last question. What are the financial implications of ESG factors? ESG factors significantly influence long-term financial performance. As climate change, diversity, and board composition shape risk and opportunity landscapes, investors increasingly prioritize ESG in their decisions, recognizing its impact on sustainability. Companies must transparently disclose ESG information, as seen in firms like Unilever and Tesla, which exemplify effective ESG investing applications. For this question answer, you should explain the impact of climate change, diversity, and board composition. Discuss the importance of ESG in investment decisions. Provide examples of ESG investing applications. Also, the below are the tips. ESG factors impact long-term financial performance. Investors must consider ESG factors in decision-making. Companies must disclose ESG information. After watching all three videos, you should have a very good idea about the questions which may be asked in an interview. My suggestion would be to go through these videos again for finance FP&A, or you may watch if you are going through investment banking interview as well. Here are some of the tips to answer during interviews. 1. Provide clear and concise answers. Avoid lengthy and vague responses. 2. Use examples and case studies. Illustrate points with relevant examples or case studies. 3. Highlight key factors and assumptions. Clearly state assumptions and key factors. 4. Explain the implications of each point. Show the impact of each point on the overall situation. 5. Use technical terms and jargon appropriately. Use industry-specific terms correctly. Point 6. Stay focused and on topic. Avoid deviating from the question. 7. Use logical and structured thinking. Organize thoughts and present them in a logical manner. 8. Show enthusiasm and interest. Display passion for the subject matter. 9. Use visual aids and body language. Use gestures, facial expressions, and visual aids to enhance communication. 10. Practice active listening. Pay attention to the question and ask clarifying questions if needed. Additionally, consider the following. Use simple language to explain complex concepts. Avoid using cliches and generic answers. Show awareness of industry trends and developments. Highlight transferable skills and experiences. Use the STAR method to structure answers. Hope you enjoyed the interview series, and this should definitely help you in your final interviews. Don't forget to share these videos to your friends who are looking out for jobs, especially in the field of FP&A. If you are looking any specific content, do let us know through our comments section on YouTube. We would love to see you back to our channel, so subscribe.